Hello, and welcome to the Dr. Money Matters podcast, the show where we discuss important financial topics that were never covered in med school. I'm your host, Dr. Tsang Patel. This is part 2 of the episode about disability insurance with Ed Comitz, an attorney who specializes in bringing lawsuits and filing disability claims with disability insurance companies, and Stephanie Tsang, a disability insurance broker. If you haven't listened to part 1, I encourage you to do so first, as there's lots of good information. And now on to part 2. So this is own occupation. Obviously, that's something we've all been taught and learned about. But like you said, that definition seems to be evolving over time. And what once was a universal, really good definition is now kind of all over the place. And you need someone to kind of guide you through that. So let's talk a little bit about, I think Stephanie and I had talked a little bit offline about this, but there's a certain number of companies that we've been told that offer these policies. And back when I was training, it was considered Guardian was the gold standard. But I think there's a few of them out there. So is there anyone, like Stephanie, if you could just kind of go through the companies that offer the policies, obviously I'm not endorsing any company here, but just that you've seen that offer the most favorable terms not cost specifically, but the most favorable definitions to physicians.
Yeah, of course. And it's just so you guys know, when it comes to disability insurance, it's state-based. It's not national. Even though Guardian is a national company, there's always going to be little nuances between each state on sometimes even definition of disability. So you have to make sure that whatever state you live in is where you purchase your policy. You just want to make sure that each state is going to have different companies. More so, it's going to be the similar companies, but it might be less companies in different states. So just be aware.
So a lot of us now, we don't stick with our same job anymore. We're not, in one place of practice for a while. Does it matter that, let's say I'm here in Arizona, but, you never know, in 5 years I could be moving to Florida or Texas or New York. Does it matter where I originally purchased my insurance, or does it matter where I actually file for disability?
No, it's where you originally purchased. So once you get your contract, you bought it in Arizona, it's portable. So you can truly go anywhere. So it's not an issue there. It's just a matter of making sure in the state that you live in, when you're purchasing the policy, that you have a good idea of what companies are actually going to be relevant for your specific state. So that's first and foremost. But if we're talking about Arizona specifically, the only companies, and that's what's great about working with Ed as well, is that we've made recommendations to these companies because these are the ones that we consider a true double dip own occupation for our medical professionals. But then we work hand in hand with Ed to make sure that they truly are. So it works really well that way. But in the state of Arizona, the main companies are Guardian, as you mentioned. There's actually 2 different types of Guardian policies that are out there. There's more of a premier Guardian that I will say is kind of the Cadillac policy that's out there, but obviously you're going to pay for it. And then Guardian brought in another type of policy to be a little bit more price competitive. So they have a Guardian limited policy as well, which we can talk about a little bit later. So just know there's 2 different types of Guardian policies. The other companies that are out there that are doing well in this space are Emeritus, Principal, Standard Insurance, and Mass Mutual. So that's what we're seeing there. And like I said, different carriers come out with new products, and then someone might come in. I will say I do a lot of work in California as well. And for the longest time, for about a 5-year stretch, a couple of years ago, there was only 2 companies that had true double dip own occupation, and now there's 4. So over the years, you just have to be very careful of making sure you get those updates as well. So if there are more options available, and that's why you always want to work with somebody that's going to be, up to date with a lot of these, because they're changing all the time.
That's true. And like Stephanie said, there are companies that do have the double dip, but these same companies also have the variations in coverage too. So you have to be careful that you ask for the double dip when you're buying your policy, because these different policies they're all very nuanced. And if you have a policy that with a company that you think is reputable, but you buy the wrong policy, you're going to have issues. The other thing too that people don't understand, and I can't get into the specifics, but some companies are more aggressive when they administer claims than other companies. They're all pretty astute because there's a lot of money to save, but some companies tend to be more aggressive on the claim side. And I can't obviously recommend a particular company. I've sued every single one of them. So I can't really give you a recommendation. I've thought they've all done things that I'm not very happy about. But you're looking at, like Stephanie said, you want to talk to an advisor who can tell you exactly what policy to get. And typically, if there's the Cadillac policy is, if they're using that term, it should be the double dip policy.
Okay.
Mm-hmm.
Okay.
Yeah.
Okay, good. So a couple of questions that came to mind. So I'm a practicing physician. I bought a policy, but at the time it seemed like a good policy, but I'm talking to you guys here and I'm going back and reviewing it, and now oh wait, this doesn't have this provision or something like that. What are my options? And I'm just speaking generally here, but once you have a policy, can you change it? And what are the implications of that?
Yeah, of course. When you're in that purchasing process, unfortunately, if you have a policy and you're going to be switching to another company or you want to switch to another company, you do have to go through full underwriting again. The nice thing is, if you are actually, one of the questions that's on the application is, are you going to replace it or is it in addition? And those are kind of the big two things to focus on, is that if you're actually replacing, then they're going to give you that full amount that you want. If it's an addition, then they're going to take what you currently have in your existing policy, and then they'll just add it on top, the monthly benefit on top. So you do have to go through full underwriting. And unfortunately, that's one of those things where they're going to look at obviously any pre-existing conditions since today versus maybe the policy you bought 10 years ago, and then also age difference at that point in time. So you do have to go through the full underwriting process to actually replace to get a better policy.
So you want to be as certain as you can early on to get the right policy.
It's if you're going to pay the money, you want to do your due diligence. That's the big part of it, is just making sure you take the time to go through. There's multiple companies out there. So if somebody's just trying to push one company, you want to be kind of a little hesitant about that, because there are definitely nuances, as Ed had mentioned, in a lot of these policies. So you have to know that there's many out there, and it has to be one that's going to be specific to your needs.
I think a takeaway from this too is, if you buy early on, like you buy in medical school or right after medical school, you're going to get the best policy at the best rate that's allowed. You're not going to have to worry about the underwriting like you will 5 years later. What's happening, and unfortunately what I'm seeing now, is people are buying new policies and the policies will conflict. One policy allows them to double dip and one policy doesn't allow them to work, and they're with different carriers. The best thing you can do is, if you buy insurance early on, is to buy insurance and make sure that you have a future increase option rider on the policy, so that you could buy additional insurance under the same terms from the company as you earn more income. This way you have the same policy moving forward. It's very unlikely, after practicing for 10 years, that you're going to find a policy that's as good as the one that you found when you were in medical school. So my advice is, get the riders. They're called automatic increase riders or future increase riders that you can exercise on your own, so that you can continue to add to your coverage without changing the terms of your policy.
Okay, that's good advice right there. And so getting back to kind of a scenario here. So let's say now you're a higher income subspecialist, you're a neurosurgeon, and you're still coming out of training, but you're looking at a much higher potential income, just starting and then definitely down the line. Is there a cap in the amount of individual policy that you can get?
There is, but it's company based. So if you think about it, each company is only willing to take on a certain amount of risk. So you're talking about, one company might only give you the option to, when you're first in residency, you get that $5,000. As Ed mentioned, you add on the future purchase option that can get you an additional $10,000 to $15,000. So you're getting up to that 15 to 20. For those that want additional coverage, you actually have to go with a different company. So you have the ability of almost stacking on more because your income allows it, but each company will have its own limits. And then if you want additional coverage on top of that, you just have to apply with a different company.
Okay. And then do they conflict with each other? Can one company say?
They could. And again, that goes back to what Ed says. And that's why being very, very careful and making sure that the definitions don't have that conflicting information in there. And you're buying something that they don't offset each other. Because that's another thing, is people might buy, great, 2 policies, each $15,000, but one says you have to work. The other one says you can't work. And all of a sudden now you can truly only take one of those policies depending on if you're working or not. So you have to be careful on that too. But that's the only way to get higher than those limits that each company has for themselves.
One last thing, Stephanie, we're going to get a little bit back into the gender neutral policies. Just talk a little bit about that, because I know that unfortunately my female colleagues have, and traditionally had to pay a higher price. So how do you get one of these type of policies?
Unfortunately, the only time you can really get them is in training. So, with a lot of the work that we do, especially with medical professionals across the country, we're working with a lot of training hospitals and making sure that each training hospital usually should have some, whomever they're working with should have, there's different companies that have different rates. Some of them are just discounted rates where you can get 15 to 20% off your policy, and that's going to be for male and female. And then other companies actually have, and they're becoming less and less because it is kind of expensive for the company, is they're having gender neutral rates where technically women are considered men in that instance, and they're actually getting rates that are very, very similar. So it's just something that you have to ask for, see what companies, and that's something that, again, with an advisor that has the ability of looking at all the companies, it allows them to say, okay, well, these are companies that just have discounts where you're getting 15% off. Here's one or two companies that have gender neutral rates. You run both of them, and then honestly, whichever, as long as they both, all of them fall within that kind of true double dip on occupation definition, then you pick the one, honestly, that's going to be the least expensive at that point.
And one other question that actually came from a listener on my prior podcast on disability insurance that actually didn't occur to me, but how do you, as a disability insurance broker or agent, how do you get paid when I purchase a policy from you?
Absolutely. So I work personally as an independent broker. So what that allows me to do is kind of shop it out to all the different companies. What's nice in that situation is it's actually cost neutral to the person who's purchasing the policy. And the reason I say that is that if you were to go to Guardian online, you put in your information, it tells you a premium. What we can offer is the same thing that Guardian is going to offer online. And even sometimes we can even get the discounts if you're actually still in training. If you go to Guardian directly online, they are going to retain 100% of that compensation that's built into the premium. If you utilize any independent advisor, any independent broker, and we decide that we're going to use Guardian, then we get compensated by the companies that we use. So Guardian actually has to pay us a portion of that compensation. So it's not an addition to working with an independent advisor, it's actually cost neutral. So it makes it nice from our point of view because we can truly lay out, here's the 5 companies in your state, here's the pros and cons of each company. You pick, we get compensated by the company, it's no addition to you.
It's amazing. I mean, when it comes down to it, if you have a sophisticated advisor, you're getting free legal, or not legal advice, but free advice on purchasing the policy if you have a sophisticated advisor, and you don't have a captive advisor, let's say from a particular company who only wants to sell you that product. So it's worth going to an independent agent.
Absolutely. And I think, especially, Stephanie, you being a CFP, you can understand, like now there's obviously a much bigger focus on costs and things like that. So I think it's good for us to know how it works and be aware. But then obviously, like Ed said, the advice and the experience that an independent agent can bring is kind of invaluable. And in this situation where you want to be accurate the first time, it's even more critical than which, mutual fund or ETF you're recommending, because that can be changed. This is a much more critical thing right away. So, okay. Good. So now I've bought the policy, and 10, 15 years into my career, and I all of a sudden have either a catastrophic injury or, more commonly, like you said, you develop this progressive neurologic condition. You were fortunate enough to have a good policy, at least you thought at the time, and so you file for disability, and then you're maybe denied. What do I do? How do I know to come see you?
Let's back it up before you're denied, because you need to take some considerations into effect beforehand. Now, what's going on right now within the industry, and it's interesting because I get to talk to Stephanie about this because she's on the sales side and I'm on the claim side. So most doctors come to me before they're going to file a claim, sometimes years before they're going to file a claim, because they are unaware of what the process is and what they need to do to collect on their policies. There are a lot of mistakes that doctors can make that can eliminate their ability to collect. One of the things that they can do is they can modify their occupation. So let's say you are a surgical ophthalmologist and you're having some problems with, let's say, radiculopathy, cervical radiculopathy, and you don't think that you can do surgeries as often because of the numbness or the tingling or the neurological issues that you're experiencing. So you move from working 5 days a week to working, let's say, 3 days a week, and you start teaching at the medical school, and let's say you start flipping houses. Well, it's a duties analysis under your disability insurance policy. It's not a strict occupation analysis. The policies say you're totally disabled if you cannot do the material and substantial duties of your occupation, or now the policies say occupation or occupations in the plural. So now the company looks back and they're like, okay, this guy was a surgical ophthalmologist. He was working 5 days a week. Just prior to the claim, he was working 3 days a week. So your occupation definition is malleable, and it's looked at the time that you file your claim. So now we're looking at an ophthalmologist who's a part-time ophthalmologist, a part-time medical school professor, and a part-time house flipper. If you can do the majority of those duties, then you're not going to be considered totally disabled. So even though you were originally paying premiums as a surgical ophthalmologist, very high premiums, if you change your occupation, you might not be able to collect, or you'll be downgraded from total disability benefits to residual disability benefits. In addition, people don't understand the aggressiveness and of the investigation and how robust it is. Back in the day when I started 25 years ago, you would basically submit a note from your doctor verifying that you were disabled, and if you were, you would be able to collect on your policies. Now it's much more complicated. It's not like life insurance where you provide a death certificate and the company is going to pay. If you want even the claim forms from the company, many of the companies are not giving you the forms when you call in for them unless you submit to an interview recorded right then. And there are all sorts of questions that can be asked that can really trip you up. So, for example, if you're asked a question like, what are your duties of your occupation? And you say things like, well, I see patients in the office, I do some administration, I also do surgery, and then you're asked what percentage of time is ascribed to each of these. Well, to the extent that, any aggregate amount adds up to, let's say, 30% or 40%, you're immediately going to be downgraded from a total disability claim to a residual disability claim. There are also questions that are asked about like what you're doing in your spare time. The claim forms ask, what are you doing? Here's a typical day. Tell me what you're doing starting at 6 o'clock in the morning until the time you go to bed. The reason why they're doing that is because 100% of claims will be under surveillance at some point in time, and usually multiple points in time. So this is not for someone who's in a coma. This is not for someone who's a quadriplegic. This is for someone who has a slowly progressive condition. So it's important to understand that people really don't get it. It's like when you file a claim with an insurance company, with a disability insurance company, it's actually staffed by an analyst, an attorney, and a physician with the company. And they work together in what are called roundtable reviews to find out, is there any legal way or medical way or administrative way that we cannot pay this benefit? And if we cannot pay the benefit, then we're going to save potentially millions of dollars down the line. So let's put a lot of effort into figuring out how could we not pay this claim. One of the things that we're seeing happening with the insurance companies all the time is you're required to sign a very broad authorization. And the authorization allows the insurance company or its agents to speak to your doctors, to speak to your friends, to ask for your medical records, to ask for your financial records, really whatever they want. So what happens is the insurance company's lawyer will the insurance company's doctor will contact your treating doctor and have a very nice, affable conversation on the phone and then say, okay, thanks for giving me this information. I'm going to send you a letter summarizing what we talked about. If you don't sign it in 10 days, I'm going to assume that everything that that's in my letter is correct. Well, the problem is I was just at the Mayo Clinic yesterday, and my doctor was saying that he was misled to believe that the person who was calling him was actually another treating physician. The other issues that exist are that your treating physician does not know what total disability means under your policy. I mean, most people think it means that you are helpless, okay? So if you have an essential tremor and a doctor's calling your doctor and saying, well, can you go back to work? Your doctor might say, sure, but doesn't understand that, you're primarily a surgeon. Or if you are in excruciating pain all the time, really regardless of what your profession is, you might not be able to think and concentrate enough to be able to practice. So they're not giving the definition of total disability under your policy, and they're kind of pushing you to go back to work, and they're not taking into consideration really what the job duties are for your particular specialty. So it's what we're seeing is doctors being misled, signing off on statements that are really not true or that don't take additional information into account that's highly relevant. And then you need to go back to those doctors if we come in too late and say, okay, this is what you signed. Can you please modify it? And they'll say, well, I wouldn't have signed it if I didn't think it was true. And it puts them in a very difficult position. So right now, I think with these disability claims, you're finding that they're a robust interview right when you're asking for the claim forms, and then usually an in-person interview. There's surveillance. There's the peer-to-peer calls with your doctors. And then they do in-person exams, like medical exams, functional capacity exams. They'll do neurological testing, occupational analysis, that sort of thing. So that's something that people need to be aware of before they file the claim, because there are a lot of things that can happen. In addition, there are trick questions on the forms, and doctors don't realize there's a difference between can and can't and should and shouldn't. And so let's say, you have radiculopathy and can you do the surgery? Yes. Is it going to be a safe surgery? Maybe not. So when you're talking about can and can't, you should really be thinking, when you're asked those types of questions, you should be thinking of them more from the perspective of should or shouldn't. There's a concept that we call presenteeism, which is doctors working way too long. And by working too long, they are modifying their occupational definitions because they reduce their hours or they stop doing certain types of procedures. And then they expose themselves to potentially malpractice liability or a board complaint and that sort of thing. What's important to understand is if you have a medical condition that might impact your ability to practice or does impact your ability to practice, you really need to stop working, because your liability insurer is going to ask you questions as part of the original application about whether you're fit to practice. And if it turns out that you weren't fit to practice and someone sues you and the plaintiff's attorney gets a hold of your medical records, it's possible that your own malpractice carrier might not cover any damages. Or the plaintiff's attorney can argue that you knew that you had this condition but continued to work. That's not negligence. It's something more than negligence. Is it intentional? Is it reckless? Is it gross negligence? If it's any of those things, they could potentially get punitive damages, and punitive damages are not covered by insurance. The same thing holds true with your governing board. You have to complete applications to stay in good standing with your governing board, and they're questions relating to your fitness to practice. If you answer any of those questions incorrectly and later on, someone sues you and the medical records demonstrate that you answer that question incorrectly, you could find that your license is suspended or revoked. So there are a lot of things going on when people are filing claims, and that includes also selling their practice. When should I sell my practice first and then file a disability claim, or should I file my disability claim and then sell my practice? Well, no insurance company likes to see you working 40 hours a week up until the closing of your practice and then you saying, I can't work at all. So there's a lot of nuance and strategy associated with filing these claims, making sure they're properly documented, modifying the authorizations so that the insurance companies can't talk to your doctors without your attorney also being involved. So if you have a claim, and Stephanie can address this too, if you have a claim that's a more questionable claim, one that holes can be poked in, like an anxiety disorder or a slowly progressive condition, it's important that you talk to an attorney from the outset before the claim is denied, because once the claim is denied, the insurance companies and their agents are located all over the country. And so if I were to need to take depositions, let's say, in an insurance case, I would be taking depositions, in at least like 3 or 4 different states. And depositions, typically for a videotape deposition, they're running $1,000 to $2,000 each. You have to hire experts. Typically, a disability insurance case from start to end, just on costs, out-of-pocket cost, is around $200,000. So it's better to talk to a lawyer first before your claim is denied.
That's a very good point, because again, most of my audience is probably in their earlier stages of their career, and you never actually think about these type of things, but it's good to know from the outset. And after listening to you describe the stuff, it's just another reason. Doctors are used to this. We hate insurance companies, but it's just another reason. So
let me can I tell you just a brief story? I had a client come to me yesterday, and he's a doctor. I can't give you too much identifying information, but he's a doctor and had part of his finger amputated. And he was like, I think I can go back to work. So he had an individual policy and an employer-sponsored policy. So he tried to go back to work, was having a lot of problems, but he was continuing to do all of the duties that he was doing before. And his production was pretty good, but he was really just kind of muddling through. His surgeon said, the surgery that I did was a perfect surgery. You should be better, but he wasn't feeling better. He went to physical therapy, and the physical therapist said, well, we got a lot of your movement back, but he still had numbness. He still had tingling and a lot of pain. He started suffering from a lot of anxiety going to work because, some of the things that he had done, some of the work that he had done was being referred to other doctors, and these doctors were chewing him out for not doing a good job on the cases. So he knows he has got to protect his family, and he just thought, let me give it a year. I'm going to try to work. I'm going to muddle through, and at the end of a year, I'm going to collect under both of my policies if I'm totally disabled, but hopefully they'll pay me partial disability benefits along the way. Well, what he didn't realize is he took some time off. He took 3 months off just to see how he would feel. And under his group policy, he lost coverage. By taking that amount of time off, he lost coverage, and he would have to go back to work again. And by going back to work again, it would set in the pre-existing condition limitation. And so the condition that he has and that he would need to file for would now become a condition that wasn't covered under his policy. On his other policy, his individual policy, because he kept working, now we have to figure out, how do we explain to the insurance company, who's not out to find the truth, what was really going on in his life at the time and whether it was believable. And it looks like a case that unfortunately is going to end up in litigation. Now, this is someone who called us several months ago and said, I think I can handle it. Thanks for talking to me. And now he's back to us now about 6 months later, and he doesn't have coverage under one policy, and under his first policy, his individual policy, he's not getting paid either. So doctors think you're scientists, and so you think, okay, I'm going to do X, Y, and Z, and that's what I'm supposed to do. 2 + 2 = 4. I'm going to get my benefits. This is the way it works. Law is a lot more nuanced. I'm a professor at the law school here, and one of the ways we teach, or the way that all law professors teach, is through what's called the Socratic method, which is where we ask our students questions and we don't provide the answer, and then we have other students challenge their answers. And so when you're looking at a disability claim, it isn't the clarity that you're used to as a physician with science. It's nuanced. They're trying not to pay the claim, and you have to be smarter than them. They have 3 people on their side figuring out how not to pay you, so you need to have someone sophisticated on your side figuring out why they need to.
I think that's right. There's a really good point, because a lot of physicians, we're just used to, okay, we do this and then this happens. And like you say, we assume that carries over into all other fields, and it really doesn't, whether it's financial, insurance, whatever. And so just realize that. And there are situations where in certain things, doing it yourself is okay. And in other things, you really need professional help. And as unfortunately, there's a lot of lawyer jokes and stuff, but these are the type of situations where you absolutely do need an attorney. So I think it's good information. One last question, and either of you, please feel free to chime in here. At what point, there's a lot of talk of physicians retiring early and things like that. At what point would you say, in terms of a financial situation and maybe other situations that I'm not considering, would you say, okay, now's the time it's fine to get rid of your disability insurance?
Well, and I can kind of jump in there of what we've told our clients. Again, it's kind of, you're going to get probably 2 sides of the coin on this one. I think for a lot of times, for certain companies, I actually just ran into this. We had a client yesterday who has a policy with another company. And every time their future purchase option comes up, they just say increase, increase, increase. The guy's in his mid-50s at this point, and it's kind of, he has quite a few assets, and we look at it as you want disability insurance. Unfortunately, the only time it's going to pay out is if something bad happens. It's kind of like car insurance, and you don't receive any benefit when you cancel it. It's not like you get a return of premium because you didn't get disabled. So when we're looking at disability insurance, a lot of times it's the minute that we have enough assets to provide that monthly benefit for the life of that policy and hopefully even farther along, that's a good time where you can really look at it and say, okay, is this really the necessity? Because it's not like every person should really just be keeping their disability insurance until age 65 when the policy's over, or whatever type of policy you have. We want to just make sure that, unfortunately, when you need it the most is when you can't afford it. So a lot of times when you're a lot younger, but once you have enough assets to start to replace these different types of insurances, a lot of times it's not always a recommendation, but we do say, hey, if you're weighing it out, whether you should cancel it or not, take that into consideration. So if you have a $10,000 a month policy and you honestly can afford to pay out $10,000 a month to pay for your expenses if you were disabled, maybe you don't need that policy anymore. It's not a straight, hey, cancel it the minute you have that money, but it is something when people are kind of thinking about that, just know, as long as you have other assets to pay for these expenses or this income, you're okay. In that sense. But again, it's coming from a sales point of view. I'm sure kind of Ed on one side too is, hey, the more you can get, the better, and we're not against that whatsoever.
The other thing people don't realize is as you get older, you can have a little bit of premonition of what could cause you to become disabled. Like, have you developed heart disease? Have you developed musculoskeletal conditions? Are you having pain when you're working? So again, if you're 55 or 60 and you don't have any problems, okay, you might say to yourself, and you're making good money, you might say, I don't need the disability insurance anymore because what's the chance that I'm going to get run over by a train? All right. So that occurs, those types of situations occur 1% of the time. But the majority of people file claims based upon something that they can probably kind of see into the future as something that's going to cause them problems. I have anxiety. It's getting work. I'm starting to have panic attacks. I have heart condition. I've had a valve replacement. I might have to have another one. I might have to file a disability claim at some point down the line because of that. So if you could look into the future and say, I think based upon my medical history that there's a decent chance that I won't be able to work anymore, then I would keep the insurance. Also, the key question you have to ask yourself is not whether or not you can do your job, like I mentioned before. It's whether you should be doing your job. And if you can answer that you shouldn't be doing your job because of your medical condition, you are entitled to benefits under your policy. And so I think doctors take, again, this is a much more kind of scientific approach, like, can I do it? Can I bolt this in? Can I put a cast on this arm? Can I do this surgery? Yes. But should you be doing it? Should you be doing it? Are you distracted? Are you having problems associated with your condition where really you came in as a really good doctor? Do you want to go out as a bad doctor? No. The policies allow you to leave before you become a bad doctor and hurt someone.
Okay. That right there is also a very good point. Should and could. And yeah, we tend to persevere, but there's a lot of times when maybe we shouldn't be doing that. Okay. And then the other factor on it, I think, is because there's a big interest in financial independence, retiring early and things like that. And so it is one of those situations where if you do decrease your workload, like Ed had mentioned earlier, know that your policy may be adjusting downward anyway. And in that case, if you're already reaching that independence, you may be paying for the full coverage, but you probably wouldn't receive it if you ended up getting disabled. Correct me if I'm wrong, but okay. All right. Well, good. Thank you, Ed and Stephanie. This was really informative, and I think my listeners will get a lot of useful information out of it. Let me just ask, Stephanie, where can my listeners find you or reach you if they have any questions about policies? And then, Ed, same thing to you.
Yeah, no. So it's North Star Resource Group. We're actually located on Scottsdale and Lincoln Road here in Arizona. And best contact number, do you want contact info?
How about, or a website or something like that? That would be...
Me personally, you can actually get a hold of me through my email at Stephanie, STPHANIE, Tsang, TSANG at northstarfinancial.com. But you can get a lot of our information on our website, which is www.northstarfinancial.com. And then you can kind of find an advisor. But we can work anywhere. We can work anywhere in the country. Our actually firm is one of the largest independent firms in the country. So we have offices everywhere. And as advisors, we have the ability of working in all states.
Sure. I wanted to bring your attention to the fact that, we've developed a very comprehensive website that is really a research website for physicians who are filing disability claims. And it's called disabilitycounsel.net. And counsel is COUNSEL.net, not .com. And we get questions frequently from physicians on what they should do, what their policies say, what they mean, what if I'm under surveillance, what should I do, that sort of thing. And all of those questions are answered on our website. I'm located in Scottsdale. I'm in the same building, actually, as Stephanie at Scottsdale and Lincoln Road. And we have a national practice. We represent physicians and dentists and attorneys really all over the country who are having difficulties collecting on their private disability insurance policies. My direct number, if anyone wants to get a hold of me, is 480-219-5436.
I want to thank Ed and Stephanie for coming on the show. I think they brought up a lot of good points. Key amongst them, number one, get the right type of disability insurance. 2, get the adequate amount of disability insurance as soon as you can. And 3, before you need to file a disability claim, talk to an attorney. A lot of good information in this podcast, and I hope you enjoy it. Share it with your friends, and join the Dr. Money Matters Facebook group so we can discuss some of these issues further. Thanks for joining us on another episode of Dr. Money Matters. If this is the first episode you have heard, I appreciate you taking the time out and listening, and encourage you to listen to our past episodes. I would also appreciate you leaving me a positive review on Apple Podcasts, and also recommend you join our Facebook group where we have ongoing discussions about this and other topics in order to help each other reach our financial goals. Finally, I encourage you to subscribe to our email list and also to subscribe to the podcast itself on the various podcast app that you use in order to be kept aware when the latest episode comes out. More episodes of this podcast are available at www.drmoneymatters.com and on Apple Podcasts, Google Play, Stitcher, Spotify, or wherever you listen to your podcasts. Audio versions are also available on YouTube and Facebook. And you can follow me on Twitter at Dr. Money Matters or on Facebook or Instagram at Dr. Money Matters, all spelled out. Thanks for listening, and if you get a chance, please leave a positive review for this podcast, as it helps move the podcast up the rankings on iTunes and gets it exposed to a wider audience. Thanks for listening once again, and stay tuned for another episode coming soon.